Shares of Chewy, though, not leading anything here, down about 6.8%, getting very close to the low of the session here after surging initially on news that Keith Gill, a.k.a. Roaring Kitty, disclosed a 6% stake in the pet supply company. I mean, if you go by Friday's closing price of Chewy, that's about $245 million in a single stock. Meanwhile, a class action lawsuit has been filed against Gill for his role in an alleged pump and dump scheme with GameStop, which sparked the meme stock frenzy of 2021. Charlie Gasparino's here. He's been looking at the lawsuit.
Well, I mean, it is interesting. I generally don't care about class action lawsuits because they're a dime a dozen. They always get filed for a lot of reasons. But here's what this lawsuit says, and you can, I mean, Mr. Gill should have his side. I mean, I'm sure we're going to put a call into him, see if we can get what he has to say. According to the lawsuit, Gill quietly sold or exercised all of his 120,000 call options for a large profit. He revealed he has dumped the call options on June 13th. As you recall, first he came in, started, I don't know if you could say he touted it. He posted a photo, a meme of him like rocking, and the shares of GameStop.
No, it was a meme of a guy about to get onto his computer, which means getting ready to make a move.
Or maybe he's looking at Pornhub. I mean, who knows?
Possibly.
I mean, it's a male, right? So you never know. Men are sick. I tell my niece this all the time. Stay away from them. But I'm just telling you that. So that happens, and then a couple other things happen, and then he sells. Okay, now does confluence equal concurrence? I mean, is that the...
He came out on YouTube.
Right.
He had a big event on YouTube where he talked for about an hour, and he explained everything he had done. He had posted his trades.
Right. So
why isn't he allowed to sell them after he's posted them?
He's allowed to do that.
So I class action lawsuit?
I just don't see it. You know what I'm saying?
Dime
they're gonna. You see, I think what's also interesting about him is he's now become like Keith Gill is in the market. Remember in the old days? I remember covering Wall Street I've covered it for a long time. We used to hear something's trading. Well, Buffett's in the market.
That's right, exactly.
Now it's Keith Gill. The kitty is in the market.
Kitty.
And
not having a salubrious effect on GameStop or Chewy.
Yeah, because I think
Petco, the competitor of Chewy.
People are trying to figure out how do you get all that money. I mean, that's a $100 million stake. He lives in Massachusetts. If he sold his initial investment, remember in GameStop that went up and held it, and he paid the tax rate in Massachusetts after selling.
Maybe he made a lot of money on NVIDIA.
I don't know.
Over the past 3 years since he's been silent.
Maybe he's into Bitcoin.
But he did put he put a big legal disclaimer at the end of his trade.
I don't remember Ryan Cohen.
YouTube.
Remember Ryan Cohen was in Bed Bath & Beyond? He was in it, and he was on the board.
Right.
And then one day he sold it and left the board. And he probably made a profit because the stock went up when he was there. No charges, because you can't. I mean, market manipulation is very difficult. Anyway, my guess is the SEC is probably looking at all this, and they'll probably walk away empty-handed.
Charlie, thank you. Thank you very much.
Meow.
Kitty.
This morning, an SEC filing shows that Keith has purchased 9,001,000 shares of Chewy stock, a roughly 6.6% stake in the company. And in true Keith fashion, the SEC filing makes clear that Keith is indeed not a cat. Now let's briefly talk about the XRT retail ETF that's been getting a lot of attention recently because this is crazy. Both GameStop and Chewy are held in this ETF. And as of June 26th, the day before Keith's dog post, Chewy was the most heavily weighted stock in this ETF. And as of June 28th, one day after Keith's dog post, Chewy was still heavily weighted in this ETF, second only to one other stock. With this in mind, I'm curious to see the FDD data for XRT, but unfortunately, we will have to wait until the middle of July before that data is public. It is absolutely ridiculous that individual investors have to wait weeks for a data point that should be readily available to the public on a daily basis. The SEC cannot honestly claim that it cares about individual investors receiving proper disclosure about their investments while simultaneously not requiring a daily reporting of failures to deliver. I wonder if short volume and failures to deliver in the XRT ETF have anything to do with Keith's reasoning in establishing a position in Chewy. Now let's briefly touch on the lawsuit that was just filed against Keith Gill. The complaint is 40 pages long, but let me very briefly summarize and simplify it for you. An individual investor purchased 35 shares of GME stock, yes, 35 shares, and a few options at, quote, artificially inflated prices. The plaintiff accuses Keith of engaging in a pump and dump because he sold and/or exercised his call options and increased his position in GameStop by more than 4 million shares. In my opinion, this is absurd. Keith bought a position with his own money. He shared his thoughts about a company he likes. He posted memes. And by the way, you should read the complaint for this lawsuit if you get the chance, because it is absolutely hilarious to read them discuss each of Keith's memes and try to explain them in detail. Keith did not tell anyone to buy or sell anything. And rather than just taking the cash from selling his options and disappearing, Keith instead used that capital to purchase more shares of GME stock. The options were going to expire worthless if Keith didn't do anything with them. Anyone who has even a basic understanding of options knows this, and it should not have been a surprise to anyone that Keith was going to dispose of his options, whether through selling them or exercising them, before they were to expire worthless on June 21st. Personally, I don't expect anything material to come of this lawsuit. I'm not a lawyer, but the accusations made in the complaint just seem immaterial in my opinion. But I guess we'll see what happens. At the end of the day, I don't think Keith has done anything wrong. He is free to invest and trade in the public markets like everyone else. He is free to share his opinions online and post memes like everyone else. And watching the financial press react to Keith over the past month and a half has been absolutely insane. Think about this. They threatened this guy with being kicked off a brokerage platform simply due to the position he held. They tried everything they possibly could to blame the fall in GME share price on Keith when he had nothing to do with the stock dropping in price. Former regulators, instead of calling out the crimes that market makers, hedge funds, and large institutions commit on a daily basis, instead were calling for a random guy posting memes to be banned from the public markets for life. The absurdity is deafening. I just wish that the financial press and regulators would stop wasting their time focusing on a random guy on the internet and would instead use their time to hold the actual criminals accountable. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. If you want to see CNBC's take today on GameStop and Keith acquiring a stake in Chewy, then feel free to check out that video as well. It's up on the channel right now. Thanks for watching, and hopefully I'll see you in the next video.